Good afternoon, welcome to GrainTV. It's October 16th, 2014. I'm Logan Burgess. To my right here is Cody Bills. We once again had a higher move in Chicago for the grains. Take a look at the iPad here and see where we closed out the session. We had corn moving higher by 5 cents on the December contract. November beans up 14 3/4, and Chicago wheat was up 11 3/4. Another positive day here to talk about, Cody. Really kind of a gradual move higher, but really kind of an impulse toward the end of the trade session. The obvious question now is how high can these markets go? Obviously, a lot of people right now looking at a good opportunity to get in and sell.
Yeah, absolutely. And one of the things, let's just take a look at the charts here. You mentioned that we had kind of an impulse higher near the end, adding another couple cents here to Kansas City wheat, adding another couple cents to these contracts. And I think when you look at how strong we close off the day, I wouldn't be surprised if we get some continuation in an earlier session tomorrow. But when you look at Kansas City wheat, just take a look. This is a 50-day moving average. You'll notice this acted as resistance here back in August, again late in August, and right now we're approaching this level again. I wouldn't be surprised if we have some resistance off of these levels again. When you look at corn, we're hovering kind of right around that 50-day moving average. We punched through it earlier 2 days ago. Yesterday we fell down below it, and today we close again just above it. I think we're going to chop around this level here, and the question is, will this offer resistance here? Will we continue trading higher, especially when the weather starts to improve in the coming weeks?
Yeah, you know, Cody, just staying on corn here, we did have ethanol report out here today. You can see that week over week production was down 16,000 barrels per day, averaging 885,000 last week. One thing helping this weekly production move lower has been a sagging ethanol crush margin out in Iowa. If you take a look here at the chart across the bottom, the blue line is this crush margin in cents per bushel. Basically, the economic incentive for these ethanol producers to crush a bushel of corn. You can see that right now we're at some levels that we really haven't seen since January 1st, 2014. We have seen ethanol futures trade sideways here, even as the crude oil market has moved substantially lower. Really, the big thing that's been pressuring this margin is a sizable bounce in the price of spot corn out in Iowa. That's kind of what's taking the legs out of this thing. So that's one more thing that you need to keep in the back of your mind. Wouldn't expect to see a real robust number next week in terms of those ethanol crush margins. Cody, if we turn back to soybeans, though, similar to corn and wheat today, a very strong day. What are we kind of looking at right now in terms of fundamentals and technicals?
Well, when you look at the fundamentals, I think, you know, obviously we have a relatively bearish fundamental outlook here, but that doesn't have a whole lot of bearing on short covering. I mean, Logan, you mentioned earlier on the show here that we've seen open interest drop here with this rally. That would imply that short positions are being taken off the table. That would imply there is short covering in this rally here. And so when you look at these short covering rallies, as you mentioned in the show, I think it was yesterday, that these things are very they're very emotionally driven. A lot of the times decisions are being made based on margin calls, whether or not you want to hold on to a position or wire funds in. And so, you know, it's hard to know exactly how high they're going to go, but some of these resistance levels could offer up an area where we pause in price action and then either start to move sideways or start to cut back over on these lows. So make sure that you are using these charts to look at these areas, look at these targets. These may be good pricing opportunities for you in the cash market. And speaking of cash market, when you look at basis here, we've actually seen improvement along the river. So if you're trying to find good opportunities in the cash market, the river's a great place to look. Last week, basis was 10 cents lower than it is this week. So go ahead, take a look and see if it is economically feasible here to sell to these river markets or to a facility that delivers to the river markets. You may get better basis than you had last week.
Yeah, absolutely. We have a great tool here at Grain Hedge that can help you find those premium cash market opportunities. If you want to take a look at that, or our great mobile trading app here as you get out in the field to harvest this year's corn or soybean crop, visit us over at grainhedge.com. Sign up for a demo there on the left side. And as always, once you sign up, if you have any questions, give us a call at the office. Number here is 877-472-4607. Thanks a lot for joining us here on a Thursday. We'll see you tomorrow to wrap up the week.